Hello, this is Dave Knight once again at KnightCapitalManagement.com. I want to welcome you to the weekly best trade of the week. Happy Friday, everyone. The best trade of the week this week is going to be on the ZB. Actually, that was on August 14th. That was yesterday. And we're going to talk about that. As you'll see, it's going to be worth $781.25 per every two contracts. We'll get into that in just a little bit. If you've never seen Trading Places before, I would highly recommend. There's a little blog. I put a little bit of video on there. It's the pit where the Mortar brothers are getting ready to get their shirts handed to them. It's about 9 minutes long. If you ever get a chance, obviously you can just search on YouTube at Trading Places, and it'll come up. Or here, go in here and watch it. Knight Capital Management. Here's for my list. This is my live real-time trade list. I am sending out roughly 1 or 2 trades a week right now on average. Right now, this week updated, I had a trade that was worth $575 per every 2 contracts, and the second one was only $50 or $25 a contract. That actually did not work out. But anyway, put your name, email, city, state, country. Let me know where you're from. I'll be more than happy. I will not spam you. I will not sell your name. This is just my free service for you. Let's talk a little bit more about the trade itself. If you want to hear, actually, if you want to read about my reasoning behind it, go to my blog, Thursday Day Trading, ZB Spike Reversal, the ZB or the 30-year bond or the long bond. Let's take a look at the trade itself. Be careful on entries around high, low, or support and resistance. That's what I'm going to talk about a little bit more in the video replay. And here we are, $781.25 per 2 contracts. My entry was on the 850 to 905 bar off the spike reversal here. And we'll see that happen in the market. So let's just go ahead and take a look at the trade itself. As you see, volume was good on the trade, on the entry. Kind of tailed off, but I was already in the trade, and it ended up being a very successful trade. So let's take a look at the trade. Here's the replay, and at 8:30 you're going to see the market kind of start reacting on the 8:30 economic report that's coming out. And on Thursday, that economic report that came out was the core CPI, unemployment claims as well, but the core CPI is the most likely it was the red report that I had at forexfactory.com. So let's go ahead and start the replay. All right, I wanted to stop here at 8:30. Now this is prior to the report, just now getting ready to get released, and let's watch the last 5 minutes here. That's a 1 minute. Okay, let me stop. Let me take back. All right, here we are. It looks like a nice little short position to be in at 8:35. Everything is pointing to the down. One thing I want to notice is here is yesterday's low, and we're really tailoring down there on that low. This is a trade that, I mean, yeah, it will work out sometimes, but if I were really wanted to get in this trade, I would like to have seen this close down below this low. We'd have hit a lot of stop orders in the market, and most likely it would have been a run that would have went on down as well. So this bar not closing below the low kept me from losing the shirt on the way up. So let's take a look at the this bar this would be the 835. This was 820 to 835 bar, 15-minute bar, and here's the 850 to 905 bar, and you see it'll close up in here. So let's go ahead and get it rolling. Okay, there's 850. Let me stop. Let me rewind a little bit. So here's your 830 to 845 bar. Here's my entry. Let me pause this and put some notes on the chart here now. Okay, now let's take a look at the volume here. Green volume bars. 1. Here's the entry bar. Very good volume itself on the trade. Everything's pointing that the market would like to reverse off of this first bar. So I entered the market at 116.10. Let me blow this up for you a little bit. Add in yesterday a little bit too. Alright, here's yesterday's low. We kind of bounced off of it. Here's my entry at 116 and 10. It filled me. It moved here and kept real quickly moved me in. So let's go ahead and replay. Notice that the bar moved down. I had my entry in a limit order, by the way. Let me just clarify that. 116 and 10 on a limit order. I wanted the market to reach me and move above this close right there. So this trade was actually sitting on limit, and then I was in that bar. As you can see, the 116 and 16 was filled. I took half the position off here at that was worth $187.50. So let's go ahead and roll the tape. Boy, I don't like when it does that, but that's the software that I'm working with here. So let's just go ahead and see. Let me pause and reframe this. Okay, I'm back here. Here is the next bar. We're rolling to the 116.29 area. This area right here is a little below the high from yesterday, and this blue line, if you can see that, is the average daily range, or also called the upper daily range. And I put it, here's 116.31, and I wanted to be a little bit below that, just in case it would have rolled back down. So 116.29 looked like a good place for me, at least to get in and out of this trade with the remaining of the contract. So let's go ahead and roll it. There we go again. Hold on, let me. Okay, it's actually really, it keeps blowing up the screen on the zoom feature. So we'll zoom in just a second. I had to anyway. So let's just take a look at the end of this trade. Now let me stop here. Now before this bar actually made this move, when we were sitting up here, originally I had my stop sitting here at 116 and 11, and then as we broke this up to here and closed, I actually had all my contracts sitting at 116 and 16, and I wanted to make sure to take no less than that. Now I was planning on following the green line, which I did. The green line kind of met it and was moving up with it. Now I'm on the green line, and by the time I moved my stop on the green line, you can see that I was already out of the trade itself. Let me just pause this and add some numbers on here for you. Okay, I'm back. Half off at 116 and 16 for $187.50. The second half was off at 116 and 29 for $593.75. The remaining was off at, the total in the trade, $781.25 per every 2 contracts traded. Let's take a closer look at it now since I've closed it off and stopped the tape. As you can see, here's the low that I was talking about from the previous day and how it kind of acted as a springboard. Although everything was looking good at 835 to go on the short side, I would like to have seen a close below that low to warrant to try it for a short side trade. And this here, movement up, entry on the spike reversal, and going up for the average daily range. The reason I kept up for the average daily range was that this bar moved in one bar, took me out, and it was on good volume off of a red economic report, 8:30 release of the core CPI, reversed its trend, a very strong trade. Anyway, this is Dave Knight here at KnightCapitalManagement.com. I wish you all the best in your trades, and good trading, everyone, and see you until next week. Bye now.